So we have a crisis of confidence in currencies. We have a crisis of confidence in banks. And everywhere else in the world, if you want to actually access the strong currency, the dollar, you have to do it through a bank, but you can't trust the bank.
In today's video, Michael Saylor, Executive Chairman of MicroStrategy, discusses Bitcoin ordinals, transaction costs, MicroStrategy's long-term vision, and the future of money.
Bitcoin is much more ethical than 100,000 other investment ideas. And I think the ability to give digital property or digital scarcity to 8 billion people on a mobile phone is sort of a once in the history of the human race development. It's a paradigm shift. And so the reason to invest in Bitcoin is the same reason you ought to support running water or electricity. Or if I said, would you like to teach everybody, on the continent how to master fire? Why should I do that? The answer is because life is cold, short, and brutal without fire. So it left out that part, which is actually the most important part. You ought to do it because it's the right thing to do if you happen to like humanity or believe in the future of the human race.
You mentioned to me offline that money is dying, were your words. Can you comment on that?
Yeah, I think what we see is an avalanche of banking failures internationally. The extreme examples in Africa and South America and Asia, where the banks literally seal their doors, freeze your funds, and don't give them back to you. And I think we see an avalanche of currency failures all around the world. The extreme examples of Venezuela, Argentina, Nigeria, etc., Sri Lanka. But the lesser example is even in the U.S., the world's most solid, strongest fiat currency in the world today reports what is it, like a 4.9% CPI number in that range. And that means that the actual monetary inflation in the dollar is more than 5%. It's much more than that. The CPI is the lowest inflation number the government's not going to actually endorse, not the highest. Inflation in places like Argentina is 105%. Inflation everywhere in the world, in the world's strongest currency, the monetary inflation must be running 10%. In the weaker currencies, 20 to 30%. In the weakest currencies, 50 to 100%. So we have a crisis of confidence in currencies. We have a crisis of confidence in banks. And everywhere else in the world, if you want to actually access the strong currency, the dollar, you have to do it through a bank, but you can't trust the bank. And so there's a crisis of currency in the governments that control the banks, and a thought that maybe they're not all being run in a fair, equitable fashion for the people of the world. We could talk about that for a long time, but let's just start with the acknowledgement that the consensus is all of those things are losing support of the population. So if you lose confidence in the currency, the banks, then you lose confidence in fiat currency as money. And therefore the money is dying. It's obviously dying in Venezuela. It's obviously dying in Argentina, but it's dying everywhere in the world, even in the United States and in Western Europe. So when you lose confidence in the money, then you start thinking about commodity monies. If I can't trust the bank, if I can't move the money cross-border, and if the currency is losing value every year or every month, then I start thinking about commodity monies. And so the thing everybody's been talking about is, what are the commodity monies? Is it gold? Are we going to trade oil? Are we going to move timber, soybeans? Well, what are your choices? If you want to move $10 million in gold, that's 350 pounds. So when it comes time to actually trade $10 million of gold, it's going to cost you $250,000 in insurance and shipping fees to move 350 pounds of gold. If I wanted to move $10 million of oil, that's 125,000 barrels of oil. That's $400,000 to ship the oil from New York to London. Okay, that doesn't make any sense, not to mention the fact the average person doesn't have space for 125,000 barrels of oil. You want to move, property, $10 million of property is an apartment building. How do I move an apartment building from Africa to South America to North America? That's not happening at all, right? So what about a painting? Okay, well, a painting's pretty efficient, a $10 million painting. The problem is it's physical, it's fragile, it's non-fungible, which means that it might burn, it might get soaked, it might get lost, it might get stolen. But if it doesn't get any of those things and you want to trade it to the rich counterparty in London, you're paying anywhere from $500,000 to $2 million in auction fees just to trade $10 million of money in the form of a painting. So, what do we have left, right? I mean, securities, you can't move $10 million of stocks across a border because they're trapped by the counterparty. Holding $10 million of an ETF at 50 to 100 basis points a year is going to cost you $500,000 to $1 million to store your money in securities. So now you see, well, what's $10 million of Bitcoin? 300 Bitcoin. So I can have 300 Bitcoin on a hardware wallet. I could, in theory, just remember it with a 12-word seed phrase. I can move it cross-border anywhere in the world. By the way, compare 300 Bitcoin as money versus a yacht. A $10 million yacht is 125 feet long, costs $2 million a year to maintain, and costs you $200,000 to move from America to Europe at about 4 weeks or 3 weeks. So you can see all the other forms of commodity money. They're not fast. They're expensive to maintain. They're physical, they're fragile, they're non-fungible, the fees are exorbitant. So if the world's struggling for a solution to commodity money, Bitcoin is the king commodity. It's better than every other physical commodity because it's digital, which means I can carry it in the palm of my hand. Try carrying 125,000 barrels of oil in the palm of your hand. It's better than that. And it's also better than every other commodity because it's scarce. It's a scarcity. If the price of oil goes up by a factor of 10, if the price of gold goes up by a factor of 10, if the price of anything goes up by a factor of 10, people, the collective intelligence of 8 billion people will produce more of it. But Bitcoin is the one thing you can't produce more of. So Bitcoin's the apex money because it's scarcity and it's digital. And of course, it's the dominant crypto network in the world. It's the one that everybody trusts. It's the one that's truly decentralized. It's the one that's acknowledged as an asset without an issuer. So I think the meltdown of the banks and the meltdown of currencies is driving a stampede of smart money to Bitcoin.
Your already large reserves of Bitcoin, especially given that I believe MicroStrategy is already among the publicly traded companies, the company with the largest amount of Bitcoins on your balance sheet.
Sure. Well, let's start with a first observation. And starting in August of 2020, if you track the performance of every major asset class that over the next 2.5 to 3 years, and I tweeted this over the weekend, Bitcoin's up 147%. The S&P's up 23%. The NASDAQ's up 12%. Gold's up 1%. Silver is down 9%. Bonds are down 16%. Okay, so why is that? Well, because Bitcoin is the apex property of the human race. It's without counterparty risk. You don't have all of the dilutive effects of running a company. You don't have people are creating more silver, they're issuing more bonds, they're creating more gold, right? You've got regulation, tariff risk, trade risk. There are a lot of reasons why the other assets don't perform as well. So let's say that I went back in time to the summer of 2020 and you actually knew what was going to happen for the next 3 years. If you had perfect predestination, you could see the future. In that case, the issue is, how do you outperform Bitcoin? So when MicroStrategy started, we bought $250 million of Bitcoin, and Bitcoin represented 25% of our market cap. What happened next is Bitcoin performed. If we had just stopped there, if we had stopped with that, then we would have actually probably outperformed the S&P. But if you actually look at MicroStrategy stock in that time period outperformed Bitcoin. We actually did more than 147%. So how am I going to actually keep up with, and by the way, I wasn't trying to outperform, I was just trying to keep up or you might even say not lose. I was holding bonds, right? All those banks that went bankrupt, they're bankrupt because they were holding the bonds and the bonds traded down. And I just didn't want to lose slowly or go poor slowly. So when we bought Bitcoin, we were 25% of our market cap. What we did next is we actually issued a convertible bond. And so we took on some debt to buy more Bitcoin, $650 million of it. And we only paid 75 basis points in interest. So that was cheap money. The next thing we did is we issued $1 billion bond at 0% interest, zero coupon, and we bought more Bitcoin, cheap money. Then we actually issued a junk bond, no equity conversion rights. It was 6%, a bit more than 6% yield. At that time, it seemed expensive, but as you know today, it's 5% to hold the treasury bill for 3 months, right? So it's actually pretty cheap now. Then we issued some equity, $1 billion of equity. Throughout the entire time period, we rolled our cash flows into Bitcoin. The long story short, we ended up acquiring more than $4 billion of Bitcoin. Today, we've got more than $4 billion of Bitcoin on our balance sheet. We've got about $90 million of cash. So we're about 98% Bitcoin, 2% cash exposure. And if you look at our market cap, we have Bitcoin holdings in excess of 90% of our market cap. And, that number fluctuates. It could be 90, it could be 95%. But by levering the balance sheet intelligently, with a mixture of equity and debt at different time periods and cash flows, we're able to, in essence, run our enterprise software company, which is a cash cow and a stable business and a source of revenue and cash and earnings. And then we're able to use that to support our debt and our debt service. And then we're also able to construct a balance sheet that's exposed to Bitcoin. And if you calculate our enterprise value, David, our enterprise value of the business went from 600 million to 6 billion plus in less than 3 years. So we jacked up the enterprise value of the company by a factor of 10. Now, why would I keep buying Bitcoin? Because Bitcoin on average is going up 50% a year for the past 3 years, right? And the S&P is going up 6% or 8%. And the NASDAQ is going up 4%. And so what I'm doing is I'm basically acquiring a high growth digital monetary network, which is the dominant digital network. And it's like if you ran a stable cash cow company that was growing just a couple of percent a year, and you had the ability to raise capital and buy a company growing 50% a year that was the dominant monopoly in its space, that's a transformational financial transaction. Why wouldn't you do that?